Hi everyone. So it's Thursday, 19th of March. We're approaching the last 2 hours of the US session, and here we have a chart of the S&P. I'm going to start on a day chart and then kind of zoom in to or drill down into a 5 minute or maybe 15-minute chart to see if there is any opportunities that come today. And then I'll be navigating through some of the volatility metrics and just keeping an eye on my other screen to see if there are any news articles or anything like that that seem to be coming through. Also, we need to keep in mind that we are rolling over tomorrow, Friday, the 20th of March, for the June contract. So going forward, some of these numbers might look a bit funny, but just keep an eye on that over the coming videos. Looking at this day chart, what we've seen here today, something interesting, is that we've finally come below this pink line, which is the 200 period moving average, or in this case, the 200-day moving average. So we've just kind of come below that, and we're trading below that at uh, 6580 or thereabouts. But what you'll find interesting is that uh, in the video yesterday, we had the 4 hour chart whereby I was demonstrating how the price had fallen below, or sorry, how the 20 period moving average had actually come below the 400. So this is a significant find, or this is a significant event. Whilst we don't look at moving averages in isolation to volatility, to news, to trigger behaviors, we have to be mindful that they do signify some key levels, and you'll always find some key activity over here because it is a psychological level where many retail traders, especially, and institutions um, are looking at and focusing on, along with other key levels as well. So the point here is that the 20 moving average has dipped below yesterday on the 18th of March. It dipped below this 400. Now this is a crucial signal because if we go back to March last year, what we're going to see, and this is in yesterday's video as well, by the way, where I spotted it before it actually emerged. What we saw here, the same pattern in, I guess, maybe the earlier part of March compared to where we are now, just a week earlier. We saw that same pattern, the 20 coming below the 400, and then we had a significant sell-off with a little bit of a rebound, and then nearly 800 points down in total, maybe 900 points down in total into April. Now, there is an element of seasonality that tends to repeat itself, and we have to keep that in mind. So the general consensus now is that we've taken a very bearish view on the market. We're expecting some rebounds back into this 20 level. If we see that, so back up to the kind of 600-700 mark, maybe 6-720 or thereabouts, it's going to be a significant opportunity to start taking sale positions, short positions, and start having that downside view. Okay, so looking at the volatility, I take a quick look at volatility to see that the premiums are trading where we expect. I think this is about right. It's live now. So yeah, we've volatility's not really moved much today, so it's relatively flat. Um, so there's no significant risk here, although we can see there is some premium spread. It seems to be elevated, so there is a little bit more fear in the market than is letting off at the moment. So again, that supports the story of a bearish outlook over the coming weeks, with a seller with the idea that we're going to be selling into strength. So that view is consistent, and I wouldn't be at any point buying in this market. Even though if you really want to take a high risk, if you want to go down to the kind of 1 minute chart, maybe computer's frozen here, but let's try get that back on. Just pause that. Try get this. Yeah, here we go. Let's go down to a 3 minute chart to see if there's any opportunities to scalp here, and there are. We may see this price come up maybe 70 50 60 points through the course of the evening, maybe even in the overnight session. But I wouldn't be taking those kind of risks. So anyway, let me come on to the e-mini chart. Here we go. What we've got here is the 5 minute chart again. and as I said, it's quite flat around that, and it has been quite flat through the day. But if we see any opportunities where this price moves up past the 200-day moving average and then into the kind of like 6620, 6640 mark through the course of the evening, then the evening here in the UK, of course, then I would certainly look to enter some short positions. But this now takes me to understanding if there are any gaps, opening gaps that need to be filled before that happens. And we can see here we have a gap. When I say gap, I mean like a gap open from the day before. So this is a significant level, which means that, yeah, at possibly around 6705, at 6705, 6700 thereabouts, we should be looking at opportunities to take short positions. So um, we are still then going to be watching the markets over the next 2 to 3 hours to make that decision. Okay, so the trigger is going to be the trigger will be. Let's see how we're going here. Yeah, the trigger will be anywhere between 6645. If we get 6645, that's reasonably comfortable, but the market should overshoot beyond that. Again, this is a view. These are not predictions. It's very important to state that because we're not here to make solid predictions. We're here to get a thought, get our thoughts together in terms of what's likely to happen. You can see this was from a few days ago where I entered the short based on similar patterns that were forming. Um, so yeah, I think let's a hope for that rebound to around the kind of 600-700 mark, around sort of here. And if we get that, then we've got a good opportunity to start selling into the market and maybe aiming for about 100 points.